CNN.
We are an hour to the closing bell on Wall Street. What an interesting day it has been. The good gains that we saw right at the open and throughout the day, they appear to be evaporating. The Dow was up by as much as 177. And the reason the gains are holding those as they are, Caterpillar and Boeing, two of the biggest names on the Dow, the heaviest weights, and they are sharply up. Coke and P&G are down. When you look at the market, this has been what's driving the day. Industrial giants drive the Dow higher. Strong US data is pushing Wall Street to new records. Follow the money. A huge New York Times investigation accuses Donald Trump of tax fraud. We'll be talking to one of the reporters who did the investigation. And Aston Martin's IPO stalls out. You'll hear from the chief executive on this program. Live in the world's financial capital, New York City, on Wednesday, October the 3rd. I'm Richard Quest. I mean business. It's the rally that will not quit, although it might be running out of breath towards the close of play. Tonight, one of the world's most famous investors tells us that we're not at the peak yet, but we are well into the cycle. Oh, got a bell now. While the Dow is off the highs of the session with an hour left of trading, it is still heading for a new record, and it's been boosted by some of the strong manufacturing numbers. It's up almost 9% for the year to date. And in a moment, you'll hear from the billionaire investor Howard Marks on how he's trading the market. First, though, let us go to the Trading Post, the Questbees Business Trading Post. An overview of the Dow, the S&P and the Nasdaq. Now, throughout the course of the day, before we start, we must just change, because last night the Dow ended at a record. So, although we've now got 14 records on the Dow, 19 on the S&P, 29 on the Nasdaq. There was in record territory earlier for the S&P, but that's evaporated. And as we come to the close in just an hour or so, the Dow is losing its momentum. At one point, it was up more than 170 points. Now we're just up 55. The S&P could even turn negative before the close. Only the Nasdaq seems willing to hold on to the gains with the tech stocks. So, with records being falling, but worries about the future, speaking to me on the Express, one trader said this rally is still being driven by a strong US economy.
The big number was the ISM number, that manufacturing, non-farm manufacturing number. It was great. It really was. It was the highest level ever, which shows a real strong economy, not only for this year, but probably into next year.
Right, now, that would clearly suggest the reason why the bond, when the ISM number came up, it's been up about 5 basis points. Now it's up over 60, and it's over 3.1%.
Correct.
So the 10-year Treasury suggesting higher rates.
Correct, and it's going to happen. I mean, if you look at what the Feds have been saying, if you look at the strong market, you know rates are going to go up maybe 2 more times this year.
No.
In October. Maybe, you don't know.
One is what they've been talking about.
They're saying one, but it's getting stronger by the day here. It really is. So we'll have to wait and see.
Now, that ISM number, the manufacturing data, was at its highest level, and the payroll number was good, and that is what's driven the market so far. But it begs the question why those gains have slipped away as the session went on. Overall, taking a look at the records, you've got quite a moderate amount, 9, 1 and 2 for European, many more in the US, which begs the question on this side, where are we in the cycle? The billionaire investor Howard Marks says while you don't want to miss out on the rally, it's time to start preparing for what's next. Now, Howard Marks is a legend in the investment community. His Oak Tree memos are some of the most closely watched reports on Wall Street. He joined me on the floor of the exchange and said, now, looking at the cycle, it's time to get defensive.
You have to know where you are in the cycle. That has implications for where you're going. It doesn't tell you where we're going, but it shifts the probability distribution.
Give me an example.
Well, 9 years ago, in 2009, we were at the bottom of the cycle. Everybody was depressed emotionally, financially, economically. And when you're low in the cycle, it shifts the probability distribution of future returns favorably. It makes it easy to make money, hard to lose money. That was the lesson of '09. Now the question is, where are we today?
And taking your last answer, one would assume we're late in the cycle.
Yes.
Therefore, the probability has shifted the other way.
Exactly.
Harder.
Exactly.
To do it. Therefore, what strategy do you adopt and implement? Particularly, as you said in your recent note, tech stocks, for example, which you described as being very highly priced.
Well, you know, everything you want to do in the markets, stocks, bonds, etc., there are aggressive and defensive ways to do them. If we are elevated in the cycle, if the probability distribution of future returns has shifted unfavorably, then I think we want to do things in a defensive way.
And would you think that's where we are at the moment? That we are at an elevated level and we should be adopting a more defensive strategy?
Elevated. This is not, I'm not saying get out, I'm not saying a peak, I'm not saying a dangerous bubble, but I think we're well above the midpoint of fair value. And if that's true, if we are selling at, if things are priced full relative to intrinsic value, then I think that defense is more important than offense.
Explain then what a defense looks like in terms of an individual investment strategy.
Well, you might want higher quality stocks, lower valuations, defensive industries. These are all ways to implement defense.
Fascinating. So this is a way of remaining fully invested in equities.
Exactly.
But at the same time, basically taking a safer, going to some thicker ice.
Exactly. I think that being out of the market is pretty dangerous today. And I think it would be a mistake to raise cash, but I do think it's not a bad time to shift toward defense.
The White House is pushing back against a blockbuster report that we all woke up to in this morning's New York Times. It is a report about Donald Trump's taxes. And while state authorities are opening a review into President Trump's taxes, in a moment we'll speak to one of the authors of this report. So it's extraordinary, the sheer length and depth of this. It's a report in the New York Times that covers 8.5 pages, and it refutes the image of Donald Trump as being a self-made billionaire who did it all on the back of $1 million loan from his father, Fred Trump. But more seriously than ego and pride, it alleges tax dodging, that's their words, and outright fraud. In today's dollars, if you look at what he got now, Fred Trump, that's Donald Trump's father, transferred $413 million to his son over the lifetime. $413 million in today's dollars. So he'd already given him $200,000 a year by age 3. Donald Trump was therefore, by all of this money, a millionaire by age 8. The biggest payday came in 2004. Now, putting it all together, you can see part owner receiving $1 million a year, amassed $9 million. Largest payday, $236 million. Russ Buckner put together the pieces. He is the investigative reporter, and your byline is on the article. Congratulations, sir.
Thank you, sir.
Essentially, what they were doing, if I read it correctly, was laundering money.
It's an interesting interpretation. I mean, there were several prongs to this. One of them, you're right, does look a bit like that. There's loans that Donald had borrowed, money he had borrowed from his father that he didn't pay back, converted that into an investment in one of his projects, and then his father wrote it off as a loss. That does sort of look like they just washed away that loan. There's other things where they're invoice padding as a way to just pass money through to the kids. And then there's sort of very aggressive, perhaps fraudulent tax maneuvers just on their own where they're undervaluing their father's property in order to take them through trusts with as little money changing hands as possible.
So the goal here throughout was, you allege, to move the money to the children without having to pay gift tax, inheritance tax eventually, or any other form of income tax at a higher rate.
That's exactly right. Their father was a billionaire by any standards, by modern standards certainly, at a fairly young age, and they started trying to plan to move that through to the kids. If they wait until he dies, that's a 55% estate tax at the point in time.
When I was reading it this morning, and I'll be frank, I haven't finished it because I want to digest it in great detail, but you do say on page 11, Fred Trump was relentless and creative in finding ways to channel this wealth to his children.
It's an amazing thing. We found 295 unique streams of income from Donald Trump's father to him. When he was 3, his father gave him land, and his siblings land under one of his building projects, and then signed 100-year leases to pay them every year for the rest of their lives and beyond to rent the land on the buildings he had built. He treated them like bankers, where he pretended to borrow money from them, and they collected interest on it.
How much of all of this should have a reputable set of accountants said, stop this now, this is not valid?
There are some key junctures where they were doing things that, as you said, an accountant should have done it. One was the project that I mentioned, where there was an investment in Trump Palace that his father wrote off as a complete loss. That's just flat out not allowable to write off a loss in investment in a related party.
But things like the boiler contract, where that was a straightforward example of padding an invoice, marking it up to basically extract money from a subsidiary at a lower rate.
That's exactly right. And then they also used those inflated bills to apply for rent increases on their rent-regulated apartments, which then passed along a punishing rent increase to their tenants.
I'm just going to take a punt with this because, on this question to you, it's important stuff. You spent 18 months looking at it. It was obviously extremely difficult. But what do you hope it says or shows that some Americans didn't? I mean, many people already knew that there was something probably dodgy in the tax affairs of the president and his family. So what do you hope this shows more then?
I don't think we pursue these things hoping for some certain outcome. We pursue them because we're curious, and it seems like an incredibly unmined part of his life, one that he's misled people about for his entire life, really. And we want to explore what the truth is. And then people, maybe what we hope, the most we hope, is that when people are making decisions about how they want to evaluate who he is, they have some real information to deal with.
Right. Now, do you think that makes any difference to the core Trump voter, the fact that he and his father may have swindled on their taxes?
I haven't seen any evidence that the core Trump voters are much interested in anything that has to do with him that runs counter to their support of him. He has a very strong base of support, as we've all seen, and as he has said repeatedly.
Extraordinary. Thank you.
Thank you, sir.
Award-winning.
Thank you very much.
Thank you very much. Now, to help us understand the legal trouble that the President of the United States may be facing, Shan Wu is a former counsel to the U.S. Attorney General and a CNN legal analyst. Well, you've obviously read at least a good portion of this. How much culpability, forget pride, ego, and whether it's simply embarrassing, but legal culpability, bearing in mind the New York State tax authorities are looking into it. What's the liability for the President?
Most likely, the liability is going to be a civil one. There's not going to be a statute of limitations on either the federal tax authorities or the states going back to see if there was an underpayment of taxes. They are quite relentless in their own way on that front. On the criminal front, much more difficult. There's going to be statute of limitations. Many of these actions are quite outdated in terms of being able to prosecute them. And perhaps most importantly on the criminal front, there is going to be walls and layers and more walls and layers of defenses in terms of accountants, lawyers who may have brought in. Things like this are quite complex. I mean, there's a tremendous job of investigative reporting to explain it in plain English for people like me to understand. If that were to go to court in a criminal investigation, it would just be armies of accountants defending that these were discretionary, these were creative ideas, very difficult case to criminally prosecute.
Donald Trump has never released his tax returns, claiming that he was being audited and therefore he would only release them after the audit. And then into the first few weeks of his election, basically he said, no, you're not going to get them at all. Does it matter? Does it matter, do you think, if the President of the United States has been involved in shady tax affairs?
I think it does matter. I think the great value in stories like this is it kind of deconstructs the mythology about this idea that he's a self-made man. And if it politically, as opposed to legally, forces him ultimately to release those tax returns, in conjunction with things like Michael Cohen, turning government evidence, there may be more current illegalities that surface because of that. So the disclosure of those tax returns is not only just a political egg in the face for him, but I think that does potentially cause criminal liability possibly.
And can the U.S. population be assured that the IRS won't be instructed to ignore this? I mean, yes, it's independent, but at the same time, a lot of those people who would be controlling and making decisions are political appointees.
Absolutely. I think that's a very valid concern. At that level, it's quite possible that there could be some type of direction. It would need to be not very overt. I think that the structure of these institutions, if there's a direct order like don't do this, don't look into this, that's not going to go over well. But there can be subtle pressure put on them.
I was going to say, it won't be as vulgar as don't do. It's who will get rid of this troublesome priest, or whatever the ad was. Good to see you, sir. Thank you.
Thank you.
Aston Martin is James Bond's car of choice. Today's IPO left investors neither shaken nor stirred.